Good morning, all. I hope you are well and welcome to this morning's video. So I didn't make a video this morning because I had a bit of an incident yesterday morning. The carbon monoxide detector in my office where I am now was bleeping, and my dog got scared and decided to jam himself around the back of my office desk and completely tangle himself up in wires because he was scared of the bleeping. And it took me a while to get him out, so I ran a little bit behind with schedule, and I couldn't really make the video anyway because of all the bleeping. But anyway, I've resolved that issue now, so we are back in business. So let's break down these pairs. So Aussie yen, my favourite of the bunch, we are at an all-time high. Okay, we have this all-time high here. What happened last time? There was a very sharp sell-off. We're on the weekly chart. Let's not forget. We also have the near miss to it. Okay, so we near missed that area, and we came down in a more corrective manner than we moved up, which is usually what happens when we see a near miss to a higher area of value. Okay, we then move up, we break out of all of this impulsively, and then we see this series of impulse correction continuations, which is what we typically see. We also know at all-time highs we tend to break above. If we're going to move to the downside, we tend to break above, catch people the wrong side of the market, and then move to the downside. Okay, feel free to test this on any currency pair, any commodity. Test it on whatever you like. Okay, you can see we tend to we've broken above the high now. You can see we've broken above the high. This is where I would anticipate. Now, I said in a previous video, one of the things that I've noticed, okay, is that when we break above, we tend to get these low momentum candles. Okay, you can see that here we do have a bit of momentum here. Okay, but if this is a bull flag to push higher, okay, so you might be thinking, well, okay, that looks like a bull flag to push higher. My question always is, okay, where are we pushing higher to? Okay, if these prices down here, for example, represent discounted prices for the bigger players to step in and get long, okay, then the same is true on the flip side. So if the bigger players are getting long, where are they getting long to? They're trading with a plan. They're not trading with like the amateurs are with no plan. If I was one of the bigger players, I'm looking at where is my profit target? Where am I getting long to? And there's nowhere because we're at an all-time high. So that gives me a clue that where we are right now is likely. We may push a bit higher because it's not, especially at an all-time high, we do tend to break above before moving to the downside. But I wouldn't be surprised if at any minute we just capitulate to the downside, especially just looking at this. If we measured this, so if this is an impulse correction continuation and the legs are often of a similar length, look where we've stopped. Okay, that lines up perfectly with there. Okay, so that this might be the end of this impulse correction continuation, which means that if the leg has finished, this might be where we reverse. Okay, so if we do, what I'll be looking for is price to reverse today, and I'll be looking for it to close impulsively underneath. I'll be looking for it to impulsively close back below here, below the area of value, and then I would be looking for either a 3-touch 5-minute continuation, okay, so 6 to 8 corrective 5-minute candles, or a 2-touch 5-minute continuation with a 3-touch structured approach. And if we got that, I would look to get short on the break. If we got the same thing but on the 15-minute chart or above, then I would look for an entry on the break, but I'd also be looking for what we call the risk entry within it. It's not riskier as such. It just means I prefer to think of it as this is a reduced reward entry, not a reduced risk, and the other one as where you basically get a tighter stop loss within the flag. Okay, and then I would be looking to target this low as the first inflection point. Okay, for something in the region of 3.5. Well, the start of the channel is actually there, start of all of this. So for something in the region of 4%, and then I would set a take profit there. This is where you've got the the start of all of this consolidation there. So that would be a place where I would anticipate some profit taking. Okay, and then I would use the mechanical management tool to measure it from that range to there, and then I would trail my stop loss at the same time as letting price potentially take profit. Okay, so that is Aussie yen. So I have an alert set just above the area of value to see if we impulsively move back down, and if we don't, then I won't need to check this pair at all today. So moving on, pound Kiwi, just to say that before I forget, is that I won't be holding any positions overnight if I do happen to take one, because of the general election in the UK today. Just in case that causes some volatility and some slippage and so forth. It is general election day in the UK today, the day that all the turkeys vote for Christmas, as they usually do. But anyway, I digress before I go down that rabbit hole. So on pound Kiwi, you can see that we've had this structure here. Okay, we have the 1, 2, 3. What do we have here? We have this high here. We have this candle comes up and near misses to it, giving me a clue that this is where the liquidity is sat. We break above, catch people on the wrong side of the market, and move to the downside. Okay. We also have this here, at the moment at least, looking exactly like what I was saying. So we have this structure here with this high. Price comes up, it near misses to it. I was under the impression that this would likely, this was the middle section. Okay, and then this was potentially the 1, 2, 3, which lines up with that. And I thought that we'd likely break above, catch people, catch people on the wrong side of the market, and then push to the downside. And you can see that potentially we have the start of what may be an evening star formation. Okay, so if we zoom in a little bit more, so there is also the possibility at this moment in time, if you just look at this, we're forming some kind of base here. So I don't want to be getting short here, anywhere up here, because this might be like this kind of structure, which then pushes down like that. Maybe we tap below and then we move to the upside, and then this becomes the middle section. Okay, and then we have this larger bull flag. Okay, so if I was to take any trades here, I wouldn't be well positioned, especially as you can see we wicked to that area. We've come down to fill the wick. Okay, there's lots of moving parts to this, and this wouldn't surprise me if we are going into a general election, because people may be a little bit more cautious. Okay, so what tends to happen like through bank holidays, and it is a bank holiday in the United States today, I believe, because it is, obviously, I've just realized it's Independence Day. So sometimes we get slower price action. So if there's some big news announcement, often the bigger players will step aside, and then you just get sideways price action for a period of time, and then the volatility, the liquidity kicks in after the event has passed. Okay, so where does this buy idea that I just illustrated become invalidated? Well, in my opinion, it becomes invalidated if we break below here and we correct. Okay, that is the market saying, look, this is not a bull flag to push higher. The consolidation underneath would be the market confirming, no, there's been a check. We are actually moving to the downside in alignment with that higher time frame direction, or how it looks at the minute. Okay, because the higher time frame holds more weight. Okay, and tends to override the lower time frame. So with all of that in mind, what I'll be looking for from this pair today, I'll be looking for a break below this area of interest as I've got it. Okay, because then we would be back below. I'll be looking for a consolidation afterwards, a 15-minute consolidation, not a 5-minute. So when we're kind of retesting the back end of something else, I'm not looking for a 5-minute consolidation, because you're more likely to be tagged in and tagged out. Okay, so I'm looking for slightly more deliberacy, and I'll be looking for a break below the area of interest, followed by a 3-touch 15-minute continuation, or a 2-touch 15-minute continuation with a 3-touch structural approach. And then I'll be able to manage it down to this first solid inflection point for something in the region of 4%. Okay, I'm not too concerned about that because I don't think that holds much weight by that point. And as well, that's not really visible. This is more visible on the 4-hour chart. Okay, and what I would do in this instance is I would measure the range. So from here to there, I would set a take profit there, okay, for something in the region of 7%, and then I would trail my stop loss at the same time. So that is pound Kiwi. We shall see whether this materializes or not. What I'm going to do on the fly, I thought I already did it, but for some reason it's not there. I'm going to set an alert just above the area of interest. Okay, and if that does not trigger, then obviously we have not pushed down to this area. Okay, if that bull flag that I drew, if that were to form and we were to get something like that, would I be interested in that? Well, I would be interested in a potential long trade, but obviously, if you count the candles, that wouldn't be ready by the end of the day. So, if that formed something like that, so that is pound Kiwi. Moving on to the last pair, which is Aussie dollar. Okay, so Aussie dollar, similar sort of deal. One of the reasons this is lower on the list is because if we measure this, okay, pound dollar, so this pullback from there to there has pulled back, about 70%, 75% of the range. Okay, so this could be an impulse correction continuation. So you're slightly increasing the risk on this one because of that. Whereas if you look at pound Kiwi, okay, we've had a kind of impulse correction continuation. We're not in a kind of potential bull flag to push higher. Whereas with Aussie dollar, we have that impulse correction continuation. But regardless, even if this was a bull flag to push higher, we would likely come down to these areas to take out this low near miss 2 to give us something like that, which would be in alignment with what the DXY is doing at the minute, the dollar index, to give us something more like that. Which that you get the picture, which then taps into that area. Okay, drawn that a bit crudely, but just trying to illustrate the point. You could see that we yesterday, yes, this flag, this candle rather, is bullish, but it wicked above here and above here, suggesting that we may have washed out all of the liquidity for a potential move to the downside. And if you look at the DXY, the dollar index, it kind of did the same thing. So if this is a move to the upside to take out this high, which these highs near miss 2, so dollar strength, then that would imply Australian dollar weakness against the US dollar, which would cause this to move to the downside, which structurally makes sense. Okay, so if we zoom in, at the moment, this is not looking like a move to the downside, and once again, this could be, where we get something like that, we get something more like that, we tap into that, and then we have that structure. And then that becomes the near miss to here. So again, this could be a potential bull flag to push higher, which I would consider. But again, that wouldn't necessarily be ready by the end of the day. And one of the reasons this might be happening is because it's primarily the Independence Day in the United States today. So a lot of people may have closed their positions because of that, which gives us that sideways kind of what I think of as bank holiday price action, which causes price to consolidate sideways for a day or so before the bigger players step back in and reconvene. And you often see, even if this was a move to the downside, sometimes you see these sharp pullbacks if we're going into a bank holiday or a big event, and then price reconvenes afterwards. So sometimes people just close their positions, which causes that, and then the market reconvenes. So what I'm going to be looking for in this instance is a break. Where does that buy idea, which I just showed you, become invalidated? Well, it becomes invalidated, in my opinion and experience, if we break below the area of interest and we correct underneath, because then that is the market showing its hand saying, look, this bull flag has been invalidated. The bigger players have stepped in, and this is them stacking their orders for the next wave to the downside. And if we got this, so the same thing as I was looking for with the other pair, a break below a 3-touch 15-minute continuation, or a 2-touch 15-minute continuation with a 3-touch structural approach, I would look to get short on the break or within it. I'll be able to manage it down to the first inflection point there for something in the region of 1.7. And in this instance, I'll actually just be targeting the bottom of the range, not the 90% area. And the reason being is because if we measure the range, okay, yes, we have that there, but this would actually be, that would give us something in the region of 5%. You could set a take profit there, okay, but I prefer to aim something in the region of, something in the region more of kind of 6% plus. And if you look at this, look at the size of the stop loss and look at this would be a pullback of around, if you look at the height of this, a pullback of around 3%, which is kind of my cutoff point. So I would be happy to sit through a pullback of 3% because that's my absolute max. But any larger than that, then I would actually have been setting a take profit there. If for example the stop loss was tighter like that, I would have actually set the take profit there, if that makes sense. So it's more about not sitting through potentially big pullbacks. But that is Aussie dollar. Of course, if the stop loss happens to be tighter, I've drawn it as like 11 pips there. If it happens to be 10, then that might change things a little bit. And yeah, if it was 10, then I would perhaps take the set a take profit there instead. Okay, especially given that how far this has pulled back relative to this whole move down. Okay, so I'd be more inclined to take profit a little bit sooner because of the higher time frame narrative. But that is in terms of entry criteria, I won't be deviating from this, okay, at all. So I have an alert set just above the area of interest. If that does not trigger, then price cannot have moved down to here to potentially break below. And that's it, folks. That's all I'm going to be looking for. Nice and simple. Hope you've enjoyed this video. I've got another trading webinar to attend at 7 a.m. this morning, so I'm just going to get this video processed and uploaded for you. But for now, have a great day, and I'll see you again in the next video, and we will see whether any gapping, any slippage, any crazy price action has occurred after the general election result, okay? So see you again soon, folks. Have a great rest of your day.